From the world of politics.
There's got to be a one way or another to fund the government. There's really two ways, as you know, David, right? We could do a continuing resolution, which is what we call just continuing everything as is, or we could do what we call an omnibus, where we sort of reconfigure things.
To the world of business.
We just have this really on fire job growth, and we're asking ourselves, where are the workers going to come from? I think this report overstates how strong the labor market is.
This is Balance of Power with David Weston. From Bloomberg Studios in Washington, D.C. to our television and radio audiences worldwide, welcome now to Balance of Power. We are in Washington right now, and there's a lot going up on Capitol Hill, even as we approach the end of the year with work yet to be done. And to bring us up to speed on exactly where that is, we welcome now Bloomberg government congressional reporter Jack Fitzpatrick. So, Jack, thanks so much for being with us. My impression is Congress works best on a deadline. They do have something of a deadline, do they not, on funding the government?
Yes, the end of the day next Friday, December 16th, is the deadline. I've talked to the top negotiators and the people who are supposed to be writing the details of the bills. They do not seem like they're going to meet that deadline. They tend not to sort of wave the white flag until a bit late, but there's already a bit of a discussion about kicking it and how far they kick the can. It may be a short stopgap measure to take it right before Christmas. There's a little bit of hardball being played by Republicans who say, we're going to have House majority in January. We could do a stopgap into January and give ourselves more leverage. So there's actually more of a debate right now over how long they extend that deadline, because it doesn't look like they're going to make it on December 16th, rather than actually writing the bills, because they haven't agreed to the basics of how much to spend on defense and non-defense.
Jack, you heard there in the open to the program, Senator Pat Toomey, a Republican from Pennsylvania, who talked to us on Friday and said, look, we can do continuing resolution, which would be shorter, just sort of kicks the can down the road, or we can do an omnibus, which takes care of a lot more. Is there any realistic prospect of the larger package in the lame duck?
There is still the opportunity for the big omnibus that gives everybody the things they really want. Nobody would be happy with a longer stopgap, but the omnibus is a possibility. That's why there's a bit of discussion about Richard Shelby, the top Senate negotiator on appropriations, saying we could be here right up until about Christmas to try to get an omnibus done before the end of the year. It would be a tough thing to kick it into the next Congress and go to new Republican House leadership, even though they may want the votes, and say, well, now you have a deadline early on in your tenure as Speaker. If Kevin McCarthy becomes Speaker, that would be a really significant challenge. So they're keeping alive the idea of an omnibus that gives everybody a good compromise, fully funding the government this year. But the challenge is that they are not close to a deal right now, and the 16th is coming up. So they've got to have a conversation about, do you buy an extra week, or do you potentially give up and go into the next year?
Okay, Jack, always great to have you with us. That's very helpful. That's Bloomberg's Jack Fitzpatrick reporting. He covers Capitol Hill for us. Let's turn now to one of those people that I just heard, have to be there until Christmas Eve. He's Congressman Brian Stile, Republican of Wisconsin. So, Congressman, thank you so much. Always a pleasure to have you with us from Capitol Hill. So what is your take right now on this funding the government issue? Omnibus, is there any realistic prospect for that? And is that better governance if you can get it done?
We should not be here in the first place, and we're looking at two bad options in front of us. Nothing moves Congress like a deadline, but there's no deadline like Christmas Eve. And so I'm concerned we're going to see another 1 week short-term kick the can down the road. One of my big fears is a giant lame duck omnibus with big spending numbers coming forward. That's exactly the opposite of what we need to get this economy back on track.
So, Congressman, take us into that, a little bit of the weeds here. As I understand it, there's a difference, surprise, surprise, between Republicans and Democrats. Republicans want more spending for defense. They don't want to increase some of the discretionary because they say that's already done in the Inflation Reduction Act. On the other hand, the Democrats say, let's increase it on both sides. Is that the basic issue?
That's one of the two big issues. The other is, I think everyone knows, Republicans' hands are going to improve dramatically come January 3rd when Republicans take away the Speaker's gavel from Nancy Pelosi in the House of Representatives. And so I think we really need to control this discretionary spending. We need to make sure we are strengthening our military, but the negotiations in front of us change dramatically, not only with a Christmas deadline, but the potential to really change the negotiations come January 3rd when Republicans are in control in the House.
Another issue you know very well, Congressman, is the Defense Authorization Act. Is that on a different track? Do you need to get that done before the end of the year?
I would really like to see us get that done before the end of the year. It's so important that we make sure our military is in a position of strength. We continue to see a whole host of global challenges, from Russia to Iran to communist China. And so getting the NDAA across the line, that's historically one of the few bipartisan bills that gets done every year. I'd like to see us get that done as well.
Congressman, you said there'll be a dramatic change with the new Congress because Republicans will have a majority. Maybe not quite as dramatic as a lot of Republicans thought it was going to be, because it's going to be a pretty narrow majority. Give us your sense right now in the leadership race. We know Kevin McCarthy really would like it badly. It was thought that maybe it was pretty likely that would happen. Now we've seen some challengers to him.
Yeah, I think ultimately at the end of the day, on January 3rd, Kevin McCarthy is going to have the votes and will become Speaker of the House. This is a long family car trip that we're having right now. There's going to be some tough conversations in that start of that car trip. But I think by the time we get to January 3rd on the floor of the House, Kevin McCarthy will have the votes to be Speaker.
How much fun will that job be? I mean, it's a practical matter, given the very narrow majority. I mean, the Democratic caucus has shown it can be fractious. I think the Republican one can be as well, can it not?
Yeah, well, imagine bringing 221 of your relatives over to Thanksgiving for a giant dinner. That's kind of what it's like. Ultimately, though, I think we know we have the opportunity to really make progress for the American people. We can put a check on the Biden administration because we're going to have the gavels, and we can provide oversight and accountability that we haven't seen in the last 2 years. It's important that we come together so we can get on with the work of the American people.
Is that the goal at this point of the Republicans, as someone who actually is close to Kevin McCarthy, the oversight and accountability, a lot of investigations, rather than actually getting legislation done?
Well, I'd like to see us get legislation done, but the low-hanging fruit is to provide accountability for the American people. Think just in the Financial Services Committee on which I sit, which oversees the Security and Exchange Commission, Chairman Gensler has come before the committee 0 times in the last 2 years. That's going to change. We need to provide accountability. We need to provide oversight on behalf of the American people, of the entire federal government.
So let's talk about your particular role. Kevin McCarthy, I saw in a tweet, says that you're one of the 4 people leading a transition, and it is basically on dealing with the House of Representatives and protecting the House of Representatives, which we saw attacked on January 6th. What are you looking at as part of that transition?
I think one of the most important things is one of your 5 rights under the First Amendment, that you have the right to petition your government for grievances. On the House side of the Capitol, the House has remained not fully open for over 2 years now. It's time we rip off the Band-Aid off these COVID-era policies and we allow everything to get back so that you can come and visit your member of Congress, share your opinion, come for a tour of the United States Capitol. We're done with the COVID-era policies. People want to see us get back to normal, and that's what I'm working on.
Do we have the security systems and personnel in place to protect people from something like January 6th? None of us want to see that happen again, I dare say.
No, absolutely. We need to make sure that we keep the campus secure and safe. We can do that. I've been told that all of those policies will be in place. We don't need to alter the security situation, but what we do need to do is make the campus open and accessible. I'm confident that we can walk and chew gum at the same time.
Do you need more funding? Do you need more personnel in the Capitol Police? Do you have what you need to keep it safe?
When I've talked to Capitol Police leadership, I do believe in large part we have the funding that we need. Now we need the leadership to be able to actually secure the campus. But those are questions that are ongoing as situations change here on Capitol Hill. But we do need to make sure we keep the place safe. But we also have to make it open and available to the American public. Again, I'm confident that we can do both.
So looking forward to the next 2 years, however it plays out, what is the main thing you want to get accomplished as a Republican?
Yeah, I think really we got to get our federal spending in place. We continue to watch the Fed come in with a blunt object to try to slow the economy. Why? Because Congress has wildly overspent over the last 2 years. Getting our spending on a sustainable path so that we can actually get ourselves back to normal, I think, is job number 1. And if we do that correctly, we'll be successful in bringing inflation down.
As you know, Congressman, so well, in managing any kind of budget, whether it's a private budget or public budget, there are 2 factors. One is the expenses. You just talked about the spending. The other is the revenue. What about actually making a balance of the 2? I must say, when I manage budgets in private sector, I would always say it's got to be both. You can't just do one or the other.
Well, that's why pro-growth policies are going to be so absolutely critical. As we look out, we have a whole host of tax cuts that have been put in place that are generating significant economic growth. We need to make sure that those cuts are made permanent to continue the robust growth we saw prior to the pandemic. We need to unleash American energy. We need to right-size our labor policies so that more people come off the sidelines and return back to work. If we're putting forward pro-growth policies, we're going to see revenue increase without having to raise rates.
So, Congressman, finally, this is a very large and complicated economy, a large and complicated budget. Is there nowhere that tax increases might not make sense? I mean, going back to Ronald Reagan, he did have effective tax increases in some of the usage taxes, right?
Well, I think what's key here is that we don't see a net tax increase. There could be some tweaks, some trade-offs in these conversations, but I don't think that this is a period of time where we need to raise taxes on the whole. I think what we need to get on with the work of is putting forward pro-growth policies that actually grow the economy, and in doing that will generate revenue rather than, again, raising taxes.
Congressman, really great to have you with us again. Thank you so much for your time. That's Congressman Brian Style, Republican of Wisconsin. Coming up, government spending and borrowing. We're going to go over the lame duck session with Maya McGinnis of Committee for a Responsible Federal Budget. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David West, and we started the program with a discussion with the Republican Congressman from Wisconsin, Brian Style, about the situation with the U.S. federal budget. Now we bring in somebody who is nonpartisan, who really knows the budget backwards and forwards and some of our problems. She's Maya McGinnis, president of the Committee for a Responsible Federal Budget. Maya, it's great to be with you here in person in Washington. So let me start with something we didn't talk with the Congressman about, and that's the debt ceiling. As I understand it, that's not imminent. It's not tomorrow. It's probably next month. But sometime next year, we're going to have a problem. Take us through the debt ceiling, why that's such a big issue.
Right. So the debt ceiling is the limit on how much you can borrow. We obviously have huge amounts of structural borrowing in our economy. And when you reach the debt ceiling, you're not allowed to borrow anymore. That does, if you don't make any changes, lead to default. And that is the worst economic scenario that you can imagine. Self-imposed recession would go global. It would be really terrible in its effects. The issue, however, is how are we going to lift the debt ceiling? Frankly, we should do it immediately. We should do it right away, even before that deadline. But because there's so much political posturing, I think that's going to be difficult. If you look at the history of the debt ceiling, there was a period of about 25 years when we did increase the debt ceiling. We also made changes that would help control our debt, whether it was policy changes or process changes, commissions, all sorts of different things. That was a pretty constructive way to work about it. Now, more recently, four of the past 6 debt ceiling increases, they actually made the debt worse. So we now have this whole bipartisan era of let's lift the debt ceiling, complain about it, maybe threaten default, which is really reckless, and then go ahead and grow the debt even more. So I think the big question is there a way we could go back to the way we used to do it, where we actually use this as a moment and say, we've got some real fiscal challenges in this country. How can we lift the debt ceiling without any drama, but how can we also start to face some of those challenges?
That history you just went through has led some experts, some economists say, let's just do away with it. I mean, Jason Furman says it's something like, let's make it $5 quintillion,
right.
Some ridiculous number, so that we don't have to worry about it anymore, because it's not really effectively curtailing borrowing or spending. What do you say to that? Maybe it's time to say it's not doing any good for us, it's just a nuisance.
Yeah, because we've become so polarized and unable to function, there's real risks that go with the debt ceiling. But there's also real risks that go along with the debt. And before we get rid of it, I would think about what you could replace it with that would be more constructive. Because the problem is right now, we have no limits on our borrowing. We don't require that we pass budgets. In fact, we haven't passed an actual budget in the past 7 years. We haven't passed one on time in 2 decades. So we don't have any restrictions, even if you do pass a budget, on how much you can borrow. So if we were going to get rid of the debt ceiling, I suppose I would opt for let's reform the debt ceiling, and let's do it in a way that actually limits how much we can borrow, but not at the end where it could cause a default, but in the like when you're passing the bills that are require borrowing, that's when the lawmakers should be required to actually say, I realize I'm voting to increase the debt and I'm on board with that, or say, we're going to stop and we're going to figure out how to pay for it.
Maya, I wonder if one of the problems with the debt ceiling is a little bit what we had with mutually assured destruction back with the Soviet Union back in the old days of the Cold War. The alternative is it's so inconceivable that it's not a meaningful threat. And with the debt ceiling, then the notion that the United States government would default on its debt is so inconceivable that it's actually not much of a threat, and so it doesn't scare anybody.
Yeah, it's a great point. We've learned that when you have these kinds of restrictions, they should be things that are not so terrible they'll never happen, because Congress will have to find a way to avoid it. They should be things that would be sensible policies. So instead of a debt ceiling where if you don't lift it, it means you're going to default, what if you were not lifting the debt ceiling, some gradual policy changes went into effect on both the revenue side and spending side that would start to bring down your debt, and you made that automatic? That would be a constructive kind of default. I think we've learned that these, actual create chaos default mechanisms are not the right thing to build into any part of the budget.
Although, didn't we try that with President Obama, where they had some automatic cuts that went into effect, and they thought they would be so draconian that the two parties would have to come together, and in fact, they didn't, and those draconian cuts went into effect, I think.
Well, we had spending caps, that's exactly right, except then Congress every year voted to get rid of those draconian spending cuts, so they never lasted. But I think the lesson from that one is don't have draconian spending cuts, have reasonable spending cuts. Have things that are gradually phased in that are actually tenable, small changes on both the revenue and spending side, not so huge that they're going to force action, because that action actually never comes. We've seen that through experience.
We have a December 16 deadline right now in funding the government. This is not the debt ceiling, but just keeping the government funded. And right now, there's a disagreement, as I understand, between the Democrats and the Republicans about whether we increase discretionary spending as well as defense spending. As a practical matter, is there a way to use that mechanism to have some even modest reforms, such as you're talking about, as opposed to all of the above?
There is a way to do it. The question is whether they will opt to do it. So absolutely, what we should agree is right now we know we have two big problems: inflation and near record levels of debt. Any further borrowing exacerbates both of those, and there's no justification for it. So we should first and foremost agree there will be no new borrowing. There's no reason to borrow more. And so then if you want to have some tax cuts attached, some healthcare measures, some spending increases, you'd need to offset those. And if you want to increase the appropriations levels by higher than is warranted by inflation or anything else, which is what they're talking about, numbers that are even higher than inflation, which will exacerbate inflation, you need to find a way to offset those costs. So I think the first choice is doing the real act of budgeting. If you want to do something, how are you going to pay for it? What I worry is that they're going to say, I'll trade you unpaid for tax cuts and higher defense numbers for unpaid for other tax cuts and spending increases and discretionary spending, and we will see a situation that will make inflation significantly worse.
Maya, to my ear, a lot of this sounds very sensible. I mean, you know much more about it than I do. Very sensible. At the same time, I wonder whether this can be decided as a policy matter in Washington or whether the markets ultimately have to impose discipline. I'm thinking about the bond vigilantes. Are we looking at a time, particularly as we see interest rates go back up, borrowing all that money, that enormous amount of money the U.S. government, was a lot easier when the interest rates were 0.5% or 1% or 2%. When it gets up to 5%, 6%, it's going to be painful.
That's true, and low interest rates, which are kept artificially low in a number of ways, kind of exacerbated our ability to deficit spend. It made it not seem that painful. And as rates are going up and inflation is going up, there is more pressure. But at the same time, I'm concerned about leaving it all to markets, because we've seen markets are very short-term focused, and they can see the short-term benefit of something like a burst, a sugar high, more spending, more tax cuts. They can see the benefit of that, and they don't price in as much the long-term negative effects, because they're focused on today. And so I don't think that markets are going to be what discipline us. I think we're going to need political leadership, and that's what I'm worried about, because that's kind of hard to find right now.
That was exactly my last question, political leadership. There was a time, whether you think he was right or wrong, you had a Paul Ryan who really cared about the budget. At one point, as I understand it, he would prefer not to be Speaker of the House because he wanted to run the House Ways and Means Committee. Are there leaders, either Republicans or Democrats, up on Capitol Hill you talk to who really live the budget and the deficit issues?
Well, it's interesting because Paul Ryan was tremendous on entitlement spending, but he also pushed through a tax cut that wasn't paid for. And we have that on both sides, where there are people who are really good on some parts of the issue, but maybe not both sides. You have to look at revenues. You have to look at spending. You can't pretend that there's a free lunch on either side. I will say that what we saw with the Inflation Reduction Act, where Joe Manchin basically took a huge, recklessly irresponsible Build Back Better plan and wrestled it into something that reduced the deficit, not by enough, clearly, but it was a start. I think that what he did there was exactly what we need more politicians to do. And he said, let's look at higher taxes and less spending, and that is more of a balanced approach that I think is what we need.
It's fascinating. It's really always great to talk to you, and particularly here in Washington together, Maya. This is really exciting. Thank you so much to Maya McGinnis. She is president of a committee for a responsible federal budget. Still to come, we're going to take a look at the Georgia Senate runoff election with political contributors Rick Davis and Jeannie Shan Zaino. This is Balance of Power on Bloomberg Television and on radio.
Tomorrow, Bloomberg is live from the Goldman Sachs U.S. Financial Services Conference in New York City, speaking with industry leaders, including an exclusive interview with David Solomon. Bloomberg Television and Radio, your global business authority.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. There's a lot going on these days, and the question is, what is it doing in the markets? For an answer to that, we turn now to Abigail Doolittle. So where are the markets, Abigail?
So we're looking at a down day here for the start of the new week. It's in fact the third down day for the S&P 500. Right now, the index closer to session lows, down 1.3%. You have the Dow down about 1%, the NASDAQ down 1.4%. A little bit more weakness for the banks, down 3.5%, which is interesting only because we do, of course, have yields sharply higher. So this is a good news is bad news day because that ISM services number came out better than expected, above 56, which suggests nice, healthy growth in the services area. But that, of course, David, calls into question whether or not the Fed is successfully cooling the economy. There's a lot of evidence that they are. But here you have the services area, which still seems to be pretty hot. So yields higher, stocks down.
So I must say, when I came into work this morning, I thought oil would be a big story because we had the OPEC Plus meeting on Sunday, and then we had the price caps come into effect. Are energy companies being affected differently from anybody else right now?
Well, it's interesting. Earlier, we had oil higher, up about 2% on that, around $82 per barrel for WTI crude. And you had the energy sector as one of the only sectors higher when the stock market opened. Now we have oil, in fact, down 1.7%, and you have the energy sector down with the rest of the sectors. So it seems that folks are, uncertain in the same way that OPEC Plus is, because of my understanding of that is that they're on pause right now because they don't really know what the direction of oil is with the caps for Russian oil. So I think that they're waiting to see. It seems like investors are too, in terms of the fluctuation, not even fluctuations, bigger moves that we've had for both oil up earlier and now down 2%.
You saw Mike Wilson from Morgan Stanley come out and say, he was bullish on stocks. Maybe they've gone as far as they're going to go. What typically, if there is a typical, happens in the month of December? What should we expect for the rest of the month?
So seasonally, December is a really good month, and it's not even the Santa Claus rally, which is at the end of the month into January. But I think that there's a lot of year-end, month-end, toward the end of December that can help out. And especially in a year like this, where you've had stocks down so much, you could see investors try to chase the market up, if you will, any sort of good news. We are, of course, waiting for the FOMC and the CPI. Mike Wilson's talking about resistance of the 200-day moving average. It's refreshing to hear so many people talking about the technicals. Take a look at the Dow, though, David. It's well above its 200-day moving average, and it's above that August high. So let's watch the battle between the Dow and the S&P 500.
Okay, Abigail, thank you so much for that report on the markets. That's Bloomberg's Abigail Doolittle. Coming up, we're going to talk with Brian Corbett of Managed Funds Association. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to keep you up to date on news from all around the world. For that, we turn to Lisa Mateo here with the first word.
Thank you, David. Well, in North Carolina, more than 33,000 homes and businesses were still without power today after what was called an intentional attack on two electrical substations. Authorities say the substations in Moore County were damaged by gunfire. Federal officials have been growing concerns that the nation's power grid is vulnerable to terrorism. The European Union and the Group of Seven have begun imposing their cap on Russian oil prices at $60 a barrel. The Kremlin is working on a response and says it won't recognize the rules. The French finance minister calls the cap a worthwhile effort.
We will make an assessment of the efficiency of the oil cap at the beginning of 2023, but it's worth trying with the view of reducing the Russian revenue from oil.
There are questions about how effective enforcement of the cap will be. Russian President Vladimir Putin drove a Mercedes over a bridge to occupied Crimea that was seriously damaged in an explosion. Putin inspected repairs to the road and rail portions of the bridge, which was used to supply Russian invasion forces. Russia blamed Ukraine for the attack. Ukraine didn't claim responsibility, but issued a postage stamp marking the event. Hertz will spend $168 million to settle hundreds of false arrest claims. The rental car giant was accused of falsely reporting customers to the police for car theft when a vehicle was not returned on time. Hertz says it's likely to recover what it calls a meaningful portion of the settlement from insurers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg. David.
Thank you so much, Lisa. Well, you really, if you follow Bloomberg at all, know that there's a lot of turmoil going on in the markets, in large part because of the increased interest rates, certainly in the United States, but around the world. At the same time, we have some questions about liquidity in the marketplace when it comes to treasuries. Welcome to somebody who deals with the markets and their functioning every single day. He's Brian Corbett, president of the Managed Funds Association. That represents the alternative asset management industry around the world, not just the United States. So welcome. It's great to have you here.
Thank you, David. Appreciate it.
So give us your sense about how the markets are functioning right now, because there's a lot of concern about that. It was exacerbated by what happened in the UK, actually, with the gilts. But how are the markets functioning from your point of view right now?
Well, right now, the industry is facing a historical amount of rulemaking from the SEC that's complicating the market situation. So far, Chair Gensler has put out a very aggressive rulemaking agenda of over 18 rules that affect all elements of an asset manager's business. It affects their ability to build their book, how they negotiate with their LPs and investors, and lastly, their day-to-day operations. And when you step back and look at all of this activity, what we're concerned about are how do all of these new rules, over 18 of them to date, more coming, how do they work together? What are the unintended consequences? And as you're raising, what are the concerns that these rules raise in a very volatile market environment?
So let's talk about those rules. First of all, are they actually going to see the light of day? Because the SEC chair has been talking about these rules for a long time. We've had him on, actually, and said, where are they? You predict they're going to be here. They don't seem to be coming down the pike. Are we actually going to see them or some version of them?
I think we will. I think there's a defined process for putting out rules for comment and then soliciting comment and coming out with a final rule. I think Chair Gensler has made it clear that he's going to proceed with his agenda. Even with the change in Congress and the House, I still think he will proceed with his schedule.
Well, I was going to ask exactly that question. With Republicans in the majority, with oversight responsibility up on Capitol Hill, you've spent time up there. You know the way it works. Is that going to at least slow him doim, if not stop him, on at least some of these regulations?
So to date, we have seen a bipartisan effort by Republicans and Democrats from House and Senate to encourage him to slow down. Think about the unintended consequences, really understand the rules, how they work together, and what they mean for markets. And I would expect with the new House majority being Republican that those oversight actions will continue, if not accelerate. While Congress has tools that could slow him down, I do think ultimately he will move forward with the final version of many of these rules.
So, Brian, you said that these proposed rules are exacerbating the situation in the marketplace. To some extent, people think that they're being proposed to address some of the problems with the marketplace. And let's talk specifically about transparency. As I understand it, going back to 1933, 1934, the theory about securities regulation is transparency, so the investor knows what they have. Transparency, particularly, let's talk about the Treasury market right now, where there's a lot of concern about liquidity, and a lot of movement has gone over to the hedge funds and things that are not publicly available because of some regulation that came out in 2008. Is there a legitimate point there that we need more transparency, particularly on leverage in the Treasury market?
So first off, a lot of information about hedge funds and other market participants is widely available, and it is collected by the regulators. So that information is out there. What Chair Gensler is proposing to date with respect to the Treasury market is, one, how do we clear Treasuries? And I think there are some viable, good proposals for how we move to more of a central clearing operation. But he's also proposed a rule called the dealer rule that we actually think may undermine liquidity in Treasuries securities.
Oh, how does that work? Because I had heard that the dealer rule would actually facilitate, because they'd know exactly who's holding them, what kind of leverage is against.
So today, investment managers are in the market. They're executing their strategies. What the SEC is proposing, that if a manager trades over a certain level of Treasury securities, they have to be registered as a broker-dealer. So if you're an investment advisor, you have one set of regulations, you're already registered with the SEC. Chair Gensler is proposing to change that and add a whole host of new costs and burdens on investment managers and become a broker-dealer. What that's going to do is drive many funds out of the market. At the exact time when Treasury Department is trying to bring more buyers and sellers in, the SEC is proposing a rule that will increase concentration as funds pull back because they don't want to be broker-dealers. It's cost prohibitive. Their agreements with their investors don't allow it. And you're going to see potentially less liquidity and more volatility at a time when we're all concerned about Treasury markets.
Tell us about derivatives, something a lot of us got acquainted with about 2008 or so.
Yes.
There were all of that going on. And it turns out there was a lot of opacity. We didn't know exactly what was going on. You didn't know about counterparties and things. There's a report actually on the Bloomberg today that the BIS, Bank for International Settlements, is talking about a $65 trillion wall of opaque derivatives globally now we're talking about. We're not talking about the United States. Tell us about that. Is that a real problem? Because it sounds like it might be.
So certainly derivatives is something that we've spent a lot of time working with both the CFTC and SEC on. The Chair Gensler has proposed a new rule looking at security-based swaps. It's a little bit different than the dollar derivative contracts that you're referring to that have been in the press today. I think it's incumbent on all financial regulators to make sure they're communicating and make sure they're talking to market participants to understand different volumes and contracts. And I think we have a regulatory regime in place, certainly in the U.S., that provides that type of transparency, certainly to the CFTC and increasingly to the SEC as they look to expand into security-based swaps.
So, Brian, I have the impression you're not a big fan of a lot of the regulations being proposed to the SEC. Are there any that you think, at least in a proper form, would be constructive? Is there work to be done that would be constructive?
Well, I think the industry supports disclosure, and we have long supported disclosure-based regimes. Where we think the SEC is crossing the line, and frankly, they don't have statutory authority to do many things, is to ban certain practices. And the way that sophisticated funds negotiate with their investors to secure their investment in a fund, you've long had contracting parties, very sophisticated pension funds and hedge funds on the other side negotiating. The SEC, for the first time, is looking to ban practices. And we think that is an overstep of their authority, which is as a disclosure regime.
So I can just sense people in the audience right now watching this saying, wait a second, how can you have an alternative asset manager and not talking about crypto? So is that within your bailiwick? Is that alternative assets? And what about regulation in that sphere? Because goodness knows there seems to be a growing clamor for some regulation.
There is. Certainly this is an asset class that we've all been watching over the last couple of years. As the market grows and some institutional capacity comes into the crypto markets. What's happened in the last few months, I think, has caused all of us to sort of pause and reflect. Certainly Congress is going to spend a lot of time looking at this. One of our concerns is that crypto regulation is going to really suck the oxygen out of the room in Washington as the new members in Congress look to legislate, and Chair Gensler is going to continue to pursue a fairly aggressive enforcement agenda with respect to the asset class. So it will be a busy time, but there are a lot of other issues that he's raising that we think policymakers need to stay focused on.
It's really helpful to have you in to take us through those, Brian. Thank you so much for that. That's Brian Corbett. He's president of the Managed Funds Association. Coming up, we're going to take an early look at the Senate runoff contest in Georgia. That's coming up tomorrow with our political contributors Rick Davis and Jeannie Shanzano. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Tomorrow is again Election Day. We thought we were done with the midterms. Well, we weren't. We got one left to go. It's tomorrow down in Georgia for the Senate. And here to take us through that runoff election, we welcome Bloomberg political contributor Jeannie Shanzano of Iona University and Rick Davis of Stone Court Capital. So I'll start with you, Rick, actually. Why is Herschel Walker even in this race?
Well, because he's the Republican nominee, and that's what Donald Trump wanted, and so he got what he wanted. And so now everybody who is a Republican in Georgia are kind of stuck having to vote for a guy who they just want to vote for a Republican, and he just happens to be the nominee. So there are a lot of people who are swallowing big pills to vote for him. And as you mentioned earlier, Jeff Kemp, the governor, has an ad out where he actually says, he didn't even mention Herschel Walker's name. He just says, vote for the Republican. And that's what is happening in Georgia today, is that people who will cast a ballot for Herschel Walker are doing it because they want a Republican, and that's it.
So Jeannie, I'm going to ask you the same question. Why, in fact, is this even a race at this point? For given the reasons, some of the reasons that Rick laid out, we've heard a lot about. Herschel Walker should be a very wounded candidate, it seems like, and yet the reports are it may be close.
Yeah, it's because Georgia is a swing state. And to Rick's point, you've got Republicans who are going to hold their nose and vote for Herschel Walker because he is the Republican. And that's why we've seen Raphael Warnock and the surrogates try to make this less a referendum on the Biden administration and Warnock as Democrat in a democratically controlled Senate, and more as a choice between a flawed candidate and a flawed personality in Herschel Walker and Raphael Warnock, this incumbent senator. And of course, my big question as we come into this last day of campaigning here is, where has Herschel Walker been over the weekend? He was largely absent from the campaign trail. We talked last week, he was largely absent over Thanksgiving. He's not talking to the press too much. And on the other hand, you have Raphael Warnock out there stumping, working hard to turn out voters. The betting markets have Warnock ahead by about 89%. So if you believe those, Warnock's going to keep this seat. But if you look at the polls, it's awfully tight, to your point, and that's what's got Democrats a bit nervous as we go into tomorrow.
Rick, why does it make a difference? 50-50 we've learned the Democrats can control. Or maybe I should ask it a different way. Who is Joe Manchin rooting for?
Well, and you've just answered your own question, because Joe Manchin is the reason you need that extra vote, because he held up a lot of legislation that could have been done with 51 votes because he was the swing vote. And Democrats need a caucus that they can at least lose one and still get things done. So even reconciliation and topics like that only happen if they are comfortable with the knowledge that they've got that extra vote.
Rick, there's another election coming up in short order, and that is for Speaker of the House. That Kevin McCarthy has made no secret of the fact he'd like that. It was thought, I guess, that he was a good shot, but now he's got some challengers. What are his odds?
Well, I think his odds are still really good that he's going to get elected, because he did one of the things that was most important, and that is he got Stephen Scalise to really agree not to campaign against him. If there was a legitimate option to him, that would be a real contest. But out of the 5 people who are now withholding their vote, he only needs 1. He'll get it. The other 4 will register their protest. He'll win by 218, but not by more.
Okay, so Jeannie, my question to you is, let's assume he gets it. Kevin McCarthy is the Speaker of the House. How long will he be Speaker of the House? I ran into somebody last night who claims to know about these things. They think we may have 2 or 3 speakers in the next Congress.
I would not be surprised. It is very hard to imagine how he runs this caucus. I mean, we are assuming, and I agree, he probably becomes speaker, but his difficulty has been the people who oppose him being speaker really aren't asking for that much in return. They just don't want him to be speaker. And even if he's able to pull over 1, to Rick's point, and he becomes speaker, that's not going to change in the next 2 years. So I think it is likely we could see at least 1 additional speaker in the next 2 years, if not 2. And it is just a stunning reality of how difficult it is going to be for anyone, forget about Kevin McCarthy himself, to run this caucus with these more extreme people on the right side of the caucus and the very narrow election victory they had. If Kevin McCarthy got the 60 he expected, he'd be in a much better position. But it's this tight margin that has him going into this thing, if he is elected speaker, in this wounded position.
Rick, you know that Republican caucus up on Capitol Hill better than most, better than Jeannie, better than me. If you were advising Kevin McCarthy right now, and if he gets to be Speaker, what would you tell him to do? What's the most important thing he can do?
I think to create a generation of leaders at the committee level that, will be future speakers, future committee chairs. He's got an opportunity to set the agenda for the party in the House of Representatives. And that may be the only thing he absolutely controls. And so I think his ability to get a team that's trained, it's been a long time since we had a Republican majority in the House. And so a lot of really good people have left because they haven't been able to become committee chairs or caucus chairs. And I think the leadership is going to be the #1 thing he could get done.
So, Jeannie, let me ask you the same question on the Democrat side. We know who's going to be the leader for the Democrats. It's Hakeem Jeffries. We talked about it last week. It's historic. First black congressman to serve in a leadership role like that. And there's been a really smooth transition, I'd say. I was at the Kennedy Center event last night, the honors, and Nancy Pelosi was there with her husband, and they got a prolonged standing ovation from the crowd. It was great to see him back out. What does Hakeem Jeffries need to do?
Hakeem Jeffries, it is a historic pick, and it was more of a coronation than a fight for him to become the majority leader. What he's going to have to do, he's going to have to try to keep the caucus together, and he's going to have to try to oppose as much as possible changes that the Republicans want to put into place, which dismantle some of Biden's legacy. And so, you know, he's going to have a little bit of a challenge on the progressive side. He has famously a pretty tough relationship with people like Alexandria Ocasio-Cortez. Even though he's a member of that caucus is going to be big. It's going to be about 106 in the new Congress. So we're going to have to see if he's able to keep them together and focus on challenging and opposing what Republicans want to do, because they're going to be focusing a lot of their attention not on passing bills in the interest of the American public, but on investigating Joe Biden, Hunter Biden, and the Biden administration, and people like the Department of Homeland Security Secretary. And so they're going to want to oppose as much as possible any of those positions that Republicans take.
I'm so happy to say that Rick Davis and Jeannie Sheehan Zaino will be staying with us as we're going to turn to, believe it or not, 2024. And is it going to start in Iowa again for the Democrats? Maybe not. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, we've got some developments now with respect to 2024 as we hear that President Biden has suggested that perhaps we should not start the Democratic process with those caucuses out in Iowa, and they're going to be deciding exactly what they do next. To take us through it all, we welcome now our political contributors, Jeannie Sheehan Zaino and Rick Davis. So, Jeannie, let me start with you. Who gets to decide? Does President Biden get to decide this?
Well, it's going to be the Democratic National Committee. We already saw one vote in favor of his proposal. Some people are calling it the Biden Protection Act. Other people are calling it Biden's revenge on Iowa and New Hampshire for not, supporting him, not just in 2020, but Iowa over the years. He really has very fond feelings for South Carolina, and that's where he'd like to push this thing. So that would be, if he has his way and the DNC supports it, that would be the first in the nation. And of course, I was wondering, David, if you had a part of this vote, because we see Michigan moving up, your home state as well, would be, fourth or fifth in line if this plan goes through. And of course, the reason that Biden is pushing for this, as he wrote in his letter to the DNC, is because he wants to diversify the primary goers, the voters at the beginning of the stage who are from the Black and brown community. He wants to diversify geographically. He wants to diversify in terms of the more rural and ideological aspects of the party, and they haven't found their way into Iowa and New Hampshire, which have been the first in the nation for, since the 1970s. So this is what they're pushing for. We're going to have to see if it happens. It's still got quite a ways to go before we know for certain what the calendar looks like.
So, Jeannie, I'd be less than honest if I didn't say that my heart warmed just a little bit to see my home state of Michigan mentioned there, whatever it means for the nomination program. But, Rick, I'm really curious from your point of view, because you've run these political campaigns, you've run presidential campaigns. If the only goal, and I'm not saying it is, if the only goal was to get the best candidate, what's the right answer?
Well, first of all, if anybody thinks it's a fair trade to have to deal with the Upper Peninsula of Michigan as a trade from being in Iowa in the winter, it's not a fair trade. Look, I think in this case, it actually causes a lot of controversy within the Democratic Party because they actually have to, they make the rules, they impose them on the states. And if anybody's sitting around thinking, gee, if Biden doesn't run, maybe I will, this really changes the nature of the election, and you have to rethink all the things that you thought. I'm a retail politician. I liked Iowa and New Hampshire. What am I going to do now? I've got to go to South Carolina. I don't have relationships in South Carolina like I do in Iowa. What if you'd won Iowa, and now you want to realize, all the advantages I had, whether you're Buttigieg or Bernie, who did well in Iowa, now you don't have those advantages anymore. So I think it really throws a monkey wrench into the Democratic caucus.
Jeannie, how much did Iowa do this to themselves? Rick was saying this a little bit earlier. You and I and Rick were out there when they couldn't figure out who won the caucuses for a good long time. Remember they had that new system they put together, very proud of it. It just all broke down. How much of that is part of the problem?
I think it's a big part of the problem. You know, both Iowa and New Hampshire are going to fight back on this. We've already heard this. New Hampshire may be on more solid ground because that was quite a disaster for the 2020 Iowa caucus. I think it was about 24 days before they counted the votes. But, you know, they do both have state laws which says they will be first in the nation. So this puts the DNC in a position where it's going to have to decide, does it strip these states of their delegates? And they may decide to do that. But I do think it's an important conversation to be had because since the 1970s, this has been the calendar.
Either that or we could just start it tomorrow. Might as well just get going. Thank you so much to Bloomberg political contributors Jeannie Shanzano of Iona University and Rick Davis of Stone Court Capital. Check out the Balance of Power newsletter on the Terminal online. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to Mary Lovelow of Peterson Institute, and this is Bloomberg.